Guys, when I was putting together the valuation for this one, I got even more excited. I believe that Comcast stock is absolutely on sale. In this video, I'm going to tell you why I think that is. I'm also going to give you my full valuation and tell you what I think it's worth. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice, it's just my opinion. Let's get into it. So, the reason why I believe Comcast stock is so cheap is because it's priced like a dying cable company, but it is not a dying cable company. It is a media conglomerate. When you look at the other businesses they have going, I think there's a ton of growth potential there. One of those is Xfinity Mobile, and I'm going to go through some of their other things they have going for them right now as well, but we're going to start with Xfinity Mobile. This is an MVNO business on Verizon's network, but it leverages the Xfinity Internet network. So first of all, you have to be an Xfinity Internet customer to have Xfinity Mobile. If you do, you have access to hotspots across a lot of different areas that allow you to have high Wi-Fi speeds on your mobile device as a part of this. Furthermore, they are launching this Now product that basically is a prepaid product. So they're starting to get into the prepaid business more as well and try to attract those customers. So I really like what they're doing in terms of their mobile business and how they're connecting it to Xfinity Internet. And really trying to give people an incentive to be Xfinity Internet customers. Also, going to Xfinity Internet is still going to be a better product most likely than a lot of the, it's going to have faster speeds than a lot of the other things out there. So I don't see the internet business going anywhere in the near future. There might be some thought that maybe, things like Starlink could start to come after them more. I don't see it with the current technology because the faster speeds, building out the fiber network, I think that they're just going to continue to do well in this regard. And I think bundling it with Xfinity Mobile is a great idea. Also, the fact that Comcast has access to Nintendo's IP and their characters is a huge advantage. There's a new Mario movie coming out again. They own Illumination Studios. They own DreamWorks. They have Universal. So that's a whole part of this business that's aside from, this idea of them being a dying cable company. This is content that's going to go somewhere. Probably a lot of it to their Peacock subscription service, which they have a lot of room to grow that as well, or to combine with other streaming services and create sort of like a bundled product. But what I really look for and like about this is that they've got content like this, and they're also working with Nintendo and bringing this into their theme park businesses. So they have Super Nintendo World at Universal Studios Hollywood. They're also bringing a Nintendo theme to the Epic Universe in Florida, which they will be opening soon. This new part of this is the Universal Orlando's fourth theme park, and this is going to have a Nintendo aspect to the park as well, which you can see here. So they're continuing to grow the theme park business. They have the Xfinity Mobile business, the theme park business. They have the Nintendo IP, Illuminations, at least, for now, they're working with Nintendo. They seem to be a preferred partner for sure, right? Illumination Studios, DreamWorks, Universal, all of these things. And they're also working on this theme park that's going to open in Texas that is for families with young children. This is Universal Kids Resort. So, really almost seeming in some ways to be taking a run at Disney in some regard with some of these moves. And at the price that the stock's at right now, I think it's a great value. Not financial advice, my opinion, but there's a lot to like about this stock, and I'm going to get into the numbers here in just a second. Along the way, they're increasing their dividend. They're doing share buybacks. So, I own this company. I'm going to continue to own more of the company. The more of it they buy back, I'll continue to get those dividends along the way. And I think there's a ton of growth potential here. Yes, when we look at the 10K, residential connectivity and platforms is 57% of the revenue. But I look at these other areas like media, theme parks, I think that there's room for those parts of the business to grow. And I really like the work they're doing with the Nintendo intellectual property. I think that's just great for their business. They do have debt, but when I look at how it's distributed across time, it's not particularly alarming to me. It looks like a lot of the interest rates are not bad, in that it is. It's well distributed across a period of time. And when you have all of this infrastructure you build out, and you have these theme parks and all these other things, having debt is not something that's super surprising to me. Okay. That's all aside from the sports they're involved in, all the other parts of the business. I didn't even get to all of the parts of the business in this video. But I wanted to focus on some of these things that I think are exciting about the company. And then we can look at the numbers. So if we have this story and we look at the numbers, what do we have? So here's my valuation. So if you look at revenue growth rates are really conservative here. And to get these numbers, I looked at some different things. I looked at some analyst estimates for some of this. I didn't go with them for everything. And some of them I wasn't entirely sure about how they would work and how accurate it would be going with those. So I looked at the numbers and I thought, what makes sense to me with a conservative story to go along with it? So maybe, the other parts of the business they're growing out, they replace some of the parts of the business like linear cable that might continue to shrink. So maybe it's not like they see a ton of overall growth, but as a whole, as a business, as a company, can the company continue to grow even a little bit? And if it does, this thing is way underpriced in my opinion. So you've got total revenue here, 124 billion, 271,310,000 expected 2024. That's my number I had there. Again, I'm not sure which ones I pulled from analysts. The revenues I might have. Some of the other ones I tweaked. Going forward, an actual decline in revenue in 2025 with this valuation, and then modest increases of 2% in 2026, 2027, and 2028. That is not a lot of revenue growth built into this valuation. You look at the net income margin, I went with 12.13% net income margin in 2024, and then 12.42% net income margin in 2025, and then I just did 12% going forward for the next 3 years. Free cash flow, I was conservative with this because if they're going to base the business more on these theme parks and they're going to continue to build out the internet network and things like that, I wanted to make sure that an increase in capital expenditures potentially being there as a part of this was built into it. So, if they don't get back to like 2020, 2021 free cash flow to net income margins there, and 2020 had a drop in net income, so that may not work out anyways, but you look, or not a drop, but it's quite a bit lower than the year after, right? So basically, I wanted to build in a conservative free cash flow to net income, because if CapEx is higher with some of these theme parks and other things they're doing, I wanted to make sure that I accounted for that and didn't go overly optimistic. So 90% for 2024, 87% 2025, and then I just carried that forward across to 2028. And you can see that the free cash flow growth rate there becomes 2% in the last couple years, which is actually just what I went with my perpetual growth rate, which is not a high perpetual growth rate. a lot of the time I use 2.5%. So this is a perpetual growth rate actually below what I use a lot of the time. When we look, I did a weighted average cost of capital. These are the numbers I used for that. You can see 0.97 beta. I pulled the bond rate that I could find for today. And so that obviously can change the valuation over time, although in the near term, it shouldn't make much of a difference at all, if any. Return to the market, I went with 10%. Weighted average cost of capital, I went with, I've got 7%, which is what I use for my required rate of return. And for my shares outstanding, I added together the two types of share classes from the 10K that they had put out earlier this year, and I just added them. I didn't account for the different share classes because I believe they're just transferable and they're based on voting rights. And you can correct me if I'm wrong in the comments, but I think that one of the share classes is might even just be one holder. It might be the CEO, but I'm not positive about that part off the top of my head. But when I looked at the share classes, I didn't think that a particular premium should be there for one share class over another based on how I would value it. So I just put the two together, and I got the shares outstanding that you see there. Obviously, that number is in thousands. And so I get a fair value of equity of $60.83. You look forward to 2028 here and looking at the same number of shares outstanding, PE of 15, $59.60, PE of 20, $79.46, PE of 25, $99.33. And this is a stock that today closed at $40.21. So you're talking about, with these conservative estimates, okay, and the things in the story that I went over that I think are potential, really good potential areas for growth and for continuing to build those parts of the business, like theme parks, Xfinity Mobile, all those different things. And I think you've got a stock that's significantly undervalued here. Not financial advice, just my opinion. I bought more of it today. I already had some. I'm going to see how the earnings are in the morning. I've got room to add to the position more if I decide it makes sense. Because that's kind of how I go about it a lot of the time, especially, with the things I've been buying lately. I like to be able to average in, especially with what I think is some uncertainty in the market. So I think this thing is really underpriced, and I'd love to know what you guys think about it. Let me know in the comments. Yeah, thanks for joining me again today. Bye.